When you look at the economy and you look at the markets, apart from inflation, what do you worry about?
Well, I think that we're at a complicated time because we normally don't have an event like a pandemic that forces us to shut down economic activity, so quickly and so randomly. So we generally don't turn the light switch off and then try to turn it back on. And it's when we turned it off, it was like a light switch. We went flick. Now it's like a dimmer, and we're turning the dimmer up and slowly bringing the lights back up. And it's not a straight line. Obviously, the impact of the pandemic and the path out of the pandemic is different in different parts of the world and in different locations. And governments in different places are taking different actions based on their own perspective, based on their own experience. Somebody said to me yesterday, and I think it's very, very fair, if you lived through SARS, you've got a very different point of view about how to mitigate this than if you came from a place that wasn't really affected by SARS. And so I think that we're turning the economic environment back on, but because of this crisis, we've had a massive amount of monetary and fiscal policy all over the world that's having an impact. It's having an impact on asset prices. It's having an impact on inflation, as you mentioned. I think markets generally, when I step back and I think about my 40-year career, there have been periods of time when greed has far outpaced fear. We were in one of those periods of time. And generally speaking, my experience says that those periods are not long-lived. Something will rebalance it and bring a little bit more perspective. Certainly, given that it feels like inflation's running above trend, chances are interest rates will move up. And if interest rates move up, that in and of itself will take some of the exuberance out of certain markets.
But are you expecting some kind of taper tantrum from the markets?
I'm not a good predictor. I've never thought of myself as a good predictor, but I certainly feel like the market anticipates higher rates at this point in time. The question is how much, how quickly. I don't think there's a chance that central banks can unwind this massive stimulus in a way that doesn't create some sort of a taper tantrum or some sort of a real shock to markets. But there's also a chance it can't be done that way. And I do think that people, it's been a long time since we operated in an environment where the general trend on interest rates has been higher and the general trend on inflation has been above trend. I got out of school in the early 1980s, and generally we've had the opposite, for that 35 plus years. And so, I do think people don't remember when Paul Volcker raised interest rates by 300 basis points on a Sunday afternoon. So there are a lot of factors that will go into, how this process plays out. It's unclear, but I certainly think that thoughtful market participants are thinking about it. In my conversations with big institutions, they're thinking about it and they're trying to balance the need to participate and have relative performance based on participation, and what happens as we unwind some of this and we rebalance a little bit.
So are you telling me that you're worried that markets are too cool about it just because they've made money for the last 10 years?
Well, I do think that generally speaking, everyone feels quite smart right now because most of the things that you invest in are going up. That's not the way it normally works. So again, I'm not a great predictor, but my experience tells me this is a moment in time that's probably not a sustainable moment in time.
But then it would be what, an economic shock? So away from an inflation monetary policy, what could it be?
It could be a change in the perspective of the course of economic activity. It could be some sort of a geopolitical shock. It could be that something goes wrong with respect to our emergence from the pandemic, and we have a different set of events that change the perspective. But all of this is based on kind of confidence and a forward view. And I would say at the moment the forward view is quite optimistic. If it stays optimistic and central bankers handle the withdrawal in an appropriate way with the right communication, there's a chance we can do it in a balanced way. There's a chance something could go wrong. Got to be prepared for both.
How do you prepare actually for both?
Well, you prepare by thinking about if the world looked differently, how it would affect different assets, and how would you feel if things were worth less? Not worthless, but worth less. And so in that context, we talk to our clients a lot about different scenarios, and we think a lot about our own balance sheet and our own propensity for risk as we try to navigate those things.